What's up?
Hey, good morning, Jack. How are you?
Doing good.
So, infinite banking is one of the things that we've kind of gone a little bit deeper into, especially with Jack. I know you and I've talked. We've worked on some cases together, actually, but with my clientele, focusing a lot with farmers and ranchers. I don't know if you know this, but actually, infinite banking is one of the top researched financial topics right now on the internet.
Really?
It
That makes
is,
sense.
yeah. So, one of the things I wanted to make sure I got a chance to, I don't know anybody who has more experience with these accounts than you. So I am very thrilled to get a chance for you to share with us a little bit about your experience with infinite banking and shed some light, I guess, hopefully bring some clarity to the topic.
Yeah. Well, I think one of the major reasons why people are really looking at other things is they're seeing the statements that they're getting from their local bank, and they feel like they're way behind. In fact, maybe they're actually losing. When you got inflation rates at 8 or 9%, and that's about 8 or 9% more than what they're making in their savings accounts, people are like, what else can I be doing? And so people are talking and people are searching, and you start finding out that there's other safe money strategies out there where you can park your cash and get it to work for you a little bit better and get yourself some really phenomenal benefits along with it.
Yeah. This is one exercise I like to do. So pretend I'm a second grader, Jack. How would you describe infinite banking to me in 60 seconds?
For one, you are a very big second grader. But, infinite banking is effectively bypassing the banks and going directly to a much larger, more well-funded industry, which is the insurance industry. And what people don't know necessarily is just like there's insurance companies that insure homes and cars, boats, and health insurance and all that kind of stuff. There's also insurance companies that insure cash, insure money, and also insure people. And so there are companies that specialize in offering these infinite banking strategies where you can effectively overfund a life insurance policy, allow that money to sit in savings, and you get quite a few good benefits, like you can't lose money due to market performance, right? So the stock market can go down and you can't lose value. While your money is sitting in that account, the average returns long term are going to be sitting anywhere from 6 to 9%. Long term is about the returns you might see depending on what type of crediting strategy you might pick. You've got some tax advantages in terms of not having to pay taxes on gains that you receive, as well as money that you access out of the account. Like we said before, this is a fully or overfunded strategy. So, life insurance is one of the cheapest insurances that exists, probably cheaper than what you pay for car and home and auto insurance, or like health insurance, for example. But once you've greatly overfunded that account, the reason why you do it is maybe for the tax advantages, the fact that you don't have to pay taxes on the money you put in, the money that comes out, and ultimately, when you do pass away at some point, your family inherits that money tax-free. And then another major reason why people utilize this strategy and why you've heard that term infinite banking is because you have the ability to, as many times you want to, thus the infinite term, utilize that cash for anything you want to. So you can either take out a standard withdrawal, or what most people learn how to do is take out a loan instead. And so you can pull out a loan against your total account value. So they're, I don't know if they've been talking about this lately in second grade, but the concept called leveraging, where
that's third grade.
You can take out, that's third grade. Okay,
yeah.
So all the way up to the full value of that cash. So if you have $100,000 sitting in your cash value, then you can take out a loan from the insurance company for up to $100,000. And if you do what's called a participating loan, what that means is that they're still going to credit you a return on your full $100,000, even though you're actually maybe using that money for something else. So if you're, say, into real estate investing or other types of investing where you're hopefully using that money for something smart, you could be technically making money on the same money in two places at the same time. And that is something that when you do research on the wealthiest people in our country today, these are people that haven't just learned how to make money, they've learned how to make money work for them. And that's how you hear about people that say things like, well, it's the first million is always the hardest to make. And that's partly why, because it's hard to make $1 million. It's a lot easier to make that million go make you another million, and so these are some of the ways that people use that. While most of us, don't like insurance, don't want to think about it, don't want to talk about it. When you actually look at all the research, the top 10% of the wealthiest people in our country today currently own 60% of the cash inside of life insurance companies. So that probably tells you something, and that success leaves clues, right? So we should probably pay attention to these things.
So and this is one of the questions I've kind of asked myself here recently: is this strategy just something that's becoming more readily available to more middle class and upper middle class here in America? Is it something that's been used a lot longer in the more affluent and the higher net worth, categories before?
For generations, wealthier people have been utilizing strategies like that to, obviously get some tax benefits, get some nice returns, and preserve money they can't afford to lose, and then be able to pass it all on to the next generation and avoid taxes as much as possible. A lot of people think that wealthy people don't pay any taxes, and that's really not true. If you look at the wealthiest people in America today, they pay the largest majority of taxes, but by percentage of adjusted gross income, they pay about 10% less than the average American pays. And this has a lot to do with how people aren't evading taxes, but doing the best they can to avoid taxes. So, there are companies now like ours that are starting to try to offer this to more people, even though they may not be multimillionaires yet. There's a lot of hardworking Americans that, would love to be millionaires, multimillionaires. And the problem is we didn't grow up in our country going to school learning about these things, right? So unless your parents were already rich and could say, hey, this is what I did and you're going to do it too, a lot of people out there just don't know what their options are. And that's why so many people just go to the bank. And you look at the large majority of Americans have all of their life savings sitting in accounts earning less than 1%, which is catastrophic when you look at what inflation rates are, right? So that's why there's more interest. But to be honest with you, so few people know about it because there's not very many companies that are out there that are willing to offer these to people that don't already have millions of dollars. There's not too many companies like ours that are willing to offer, free, unbiased education to people that, just need a chance but need that education.
Well, and I think that's a pretty powerful position to be in as a business, to be able to serve, those people who potentially are shut out of the doors, where, it really gives them and their family a chance to, take that next step or keep moving the ball forward. As, I look at my business as something that I potentially want to be able to hand off to, my children or to a partner in the future. A lot of the infinite banking potential that I see is in that transfer of wealth category. And I know with your practice, Jack, you're mostly, where do you, who do you see as a good candidate for infinite banking, or where do you see it as the most natural fit? And then maybe we'll even get into some more unique situations where, maybe it's more of a surprise solution, or it's something that was able to help people in ways that they weren't anticipating, like with, end of life care and things like that.
Right. If there's an absolute target market for infinite banking, there are some people that it is an absolute no-brainer for, and that would be, it's designed to accentuate those that have a higher level of income, a higher level of asset, or those who are savvier investors. Now, I believe this is also something that's good for anybody that is making money and wants to save it. So the challenge is, what the industry would say is, you cannot, offer this to the average American because they're not savvy, they're not educated. So the challenge becomes, we have to, offer classes, workshops, individual consultations and meetings to build a relationship and help people learn about these things. Because in my opinion, I don't care whether you're, making, $250,000 a year or $50,000 a year. If this exists, why not take advantage of it at some level, right? Even if it's just something to get the habit started of saving money. Infinite banking is not something that you have to have, you know, $200,000 or $800,000 or something, or millions of dollars just to be able to open an account. I started my first account with $600 14 years ago, you know, so, and I tell people that story all the time, which is, look, you know, the worst thing you can do is nothing. So the best thing you can do is learn, be open to learning. And then, you know, once you've found something that maybe is a good fit for you and your family, don't so much worry about how much you can do. Just focus on how soon you can do it.
Yeah, I think that's really good. And I think, the partners that we have that specialize on that education piece, as you know, Jack, like with the financial advising, a lot of the traditional retirement vehicles that people are aware of, like the 401k, IRAs, Roth IRAs, there's nothing wrong with those vehicles, but they're not designed necessarily to grow wealth. They're really more of just retirement vehicles to help people with that stage in their lives, right? So finding vehicles that allow us to build wealth now and be able to leverage that wealth into new projects, new businesses, a lot of my clientele are entrepreneurial and looking for those next steps. So a lot of times putting money into your IRAs and Roths, I mean, you're cornering your money in a place where it's not in a position to necessarily help you until you're, about 60 years old or more. So there's just not a lot of, in my experience, there's not a lot of other alternatives for people to invest their money that protects them from taxes, keeps their money safe, and allows them access before retirement years.
Right. Well, and when you're talking about, not only do you have to wait a long time to be able to access it, what we have to teach people is, in the future, you have to realize it ain't about what you got. It's about what you get. And, when you've got folks that are hardworking entrepreneurs, salt of the earth people, and you gaze into the future and look at, if you are 100% putting your retirement savings in things like 401k and IRA, that's great that you're saving money, but how much of that money is going to be yours? And what I mean by that is, you have to look at how much you might be paying in taxes. We've got some massive debt issues as Americans. We have an even bigger debt issue as America. And there's only two ways that the government can ever pay down these trillions of dollars that we have in deficit. And that's by either decreased government spending, which basically no one sees happening, or increased taxes. And when they talk about increasing taxes, they always say they should increase taxes more on people that have higher level of income or more money. So if you're a good saver, congratulations, you pay more taxes, which means that a higher and higher percentage, 30, 40, in some states, even over 50%, and maybe growing, could be split between you and the IRS. So remember, it isn't about what you got, it's about what you get. And, obviously diversification is a good thing. And you don't want to put all your eggs in one basket, but what we're talking about with infinite banking is a place where you can put eggs where you're guaranteed safety, you can't lose money, and also never have to pay taxes. So yeah, it's a pretty popular basket.
Yeah. One exercise I do with a lot of my clients is, a lot of people are familiar with diversification on their equities and their securities, stocks, bonds, mutual funds, whatever you may be invested in. But a lot of people forget to diversify in those tax buckets, like you just said. So, that tax-free bucket, you're really not sure what those tax rates are going to do in the future, but it's usually pretty simple figuring out what a good kind of balancing act might look like for any household. And that's going to be different in each household, of course.
Right.
Absolutely. So what do you have any, I guess in your experience, Jack, what are some of the common objections that you see to the infinite banking strategy?
Dave Ramsey, Google Dave Ramsey infinite banking, and you're going to find out that Dave Ramsey is not a huge fan of this concept. And Dave Ramsey, if you look at, I've had the chance to work with quite a few wealthy people, and there's not a single one of them that's listening to Dave Ramsey's advice. If you're a train wreck financially, if you have low income and high debt, then his program is designed for you. Where, like I said, infinite banking is a little bit of a savvier savings vehicle. That means that this is going to be for somebody that doesn't necessarily have $100,000 of credit card debt, and $20,000 a year of income. When somebody gets to the point where they've maybe gotten themselves out of a debt situation, this becomes one of the most powerful tools. And so, you'll hear about Dave Ramsey, and however, that's not, for somebody that really hasn't investigated what's been in the market or what's out there for quite a long time, a lot of the information that he talks about on this topic, along insurance companies is just pretty outdated, and things have changed over the last 30 and 40 years. So where what he's kind of talking about is not relevant. So anyway, still good information, still certainly helping people out there, but you do hear stuff like that. The other things you hear about as far as objections might be things like, this sounds too good to be true. And if something sounds too good to be true, it usually isn't, right? And so when you start looking at how are these companies able to do it, well, you got to think about the fact that these are insurance companies that make their money by holding on to large amounts of money. And when you look at some of these companies that have 40, 50 plus billion dollars, and if they're making a net return on each client of, let's just say 2%, right? So the client is making, say, 7, 8% long term. The insurance company is making like 9, 10%. Well, if you have $50 billion and you're making 2% net profit, guess what you still have? Well, you got billions of dollars, right?
Right.
So those are some of the bigger questions we get. How can you afford to do this without charging me fees? Mostly people are used to dealing with someone in the financial world and they have to pay fees. Well, so you could look at the cost or the fees just being baked into these companies are only offering what they can afford to offer. But still, whether there's a fee involved or not, you can't look at what you're spending. You have to look at what you're getting. And if you're not spending anything in terms of a fee and you're getting all of these benefits that we just talked about, then you have to decide whether that's really worth it to you or not. And so a lot of people are obviously deciding that it's worth it to them once they've learned about that and you start looking at all the options. But I would say those are probably the biggest objections that I hear. Most everybody's pretty familiar with insurance companies. Most people know insurance companies have a lot of money, and most people know that they trust their insurance companies to insure their cars and their home and their life. And they're just now, some people are learning that you can also trust insurance companies to insure your money too.
Yeah, that's so. Jack, how long have you been in the industry for?
17 years.
17 years. So I've been in the industry for about 8, almost 9 now. Okay. And maybe it's just my perspective, but I feel maybe it's the partners that we use and the type of business that you and I are both in. But this industry seems to be speeding up and getting more competitive almost every single year. Do you find that to be the case in your own career?
Well, what I've enjoyed seeing is that there are companies that seem to just up the ante and offer better benefits and advantages to our clients. Specifically, we like to work with companies that have been around for a long time, right? So many of the companies that we work with on these type of strategies have been around for over 100 years, some of them even over 150 years. So they've stood the test of time, right? They've been through the Great Depression. They've been through the Great Recession. They've survived and thrived throughout these times. What you see in the banking industry is, like, for example, in 2008 and 2009, there was almost 1,000 banks that went out of business, right? And so we're not used to seeing sort of that solidarity, from that industry where you might see it in the insurance industry. When you start looking at insurance companies, it also benefits you to work with what's called a mutual company as opposed to a stock company. So stock companies are owned by stockholders, right? So the company is always worried about making more profits to share with their stockholders. A mutual company does not have stockholders. A mutual company is owned by their clients. And so therefore their board is made up of their customers. And so they're always making decisions on what's best for the client. So typically when you have a company that's been around for a long time, that has a lot of money, a lot of resources, and their entire focus is doing the best thing for the client, it's awesome to work with these kind of companies. And there's many of them out there. It's just nice to see companies that are always doing, what's best for the client, right? And just increasing their benefits and offerings for people. So pretty cool when, we kind of live in a world where we're kind of used to sacrificing quite a bit, that you can see some exceptions to that rule in some places.
Yeah, that's pretty powerful. Yeah, Jack. Well, thank you for joining us on this call today. I really appreciate your time and your insight. It was a pleasure talking to you.
Absolutely.
All right, take care.
Good talking to you, Dylan. Have a good one.
You too. Bye.